Thanks so much for tuning into this earnings conversation with Kedar Upadhye of CIPLA. The company clocked in, well, a reasonably good quarter. And from the looks of things, there is some bit of better visibility that at least I can foresee based on all the notes that I've read as well. Let's get in the man to talk about how the quarter went by and what does he feel about the quarters ahead. Kedar, good having you. Thanks so much for joining into this conversation. Congratulations on a good quarter and hope all is safe.
Yes, thank you. Thank you for having me. Thank you.
No, the pleasure is ours. So, Kedar, can you tell us a bit about how the quarter went by, what contributed? Because as I can see that even if you strip out the COVID-related or the COVID-related drugs or the COVID segment, you still had a very, very solid performance in quarter two.
Yeah, what we've seen, Neeraj, is I think the demand levers and supply levers continue to remain strong throughout the quarter for all our global markets. So I think the domestic markets and international markets, I think all of them, the flow of orders, some niche launches and continuity of demand and supply levers, as I said, I think worked well. Plus the cost engine was also quite healthy. So we were able to operate as I said, if you go market by market, all the regions have delivered quite well. And probably, I think what has happened is in the June quarter, we had seen certain, in some markets, certain difficulties to carry out the business. I think all those difficulties have gone away. So supply chain is strong, distribution is strong, inbound procurement continues to remain pretty good, and flow of orders for medicines across all therapies, that has picked up well. In fact, we are one of the largest in India in the hospital business, and that has come back as well. I think surgeries have started, patients' visits have started, and across our international markets, I think in multiple tenders, so we remain one of the big players in global tenders, be it HIV or non-HIV. I think those tenders have also picked up. So all in all, I think the situation on the demand and order flow continue to be robust. So I guess I would attribute revenue growth to that reason.
Okay, just a quick follow-up, and that is on the COVID portfolio, because I think one, if I'm not wrong, if my numbers are not completely off the ball, contributed to about 5% of the first half revenues, and I think you're on record saying that you expect a third or a half of these to continue even post COVID-19 going away. So one, a word on that, and two, just a quick follow-up on that. Kedar, put two questions rolled into one. With COVID-19 showing a bit of an upsurge in Europe and US, is the demand for those products actually picking up?
Yeah, so I think what we are noticing, Neeraj, is in multiple parts of the country. I mean, if you want to start with India, I think you're right. I think I think the cases are going up, and that's why we have added a couple of sites. So we were supplying remdesivir from our captive site, and there were 2 outsourced sites. So I think between these 3 sites, we are able to sort of supply fully now, which is good. And along with that, I think, as you know, we have CIPLA'S, which is favipiravir. We have an exclusive alliance with Roche on Actemra, which is tocilizumab. And there are certain other facilitative medicines like, be it zinc syrup or azithromycin, etc. So I think between all these medicines, we are probably the company with the highest possible range of COVID medicines, and that is coming very handy. And I won't be able to predict exactly how the demand will pan out going forward. But it is our responsibility to continue to service these medicines throughout the country. So I think we are sharpening our distribution and supply chain. As you know, we have set up multiple help desks, and we are ensuring that across all parts of the country where demand continues, I think the supply remains robust. So all that we are continuing. And we are reading about the sort of surge of the cases in select parts of the country. And that's why probably in the coming few quarters, I think the volumes are going to continue at the same rate at which they are in our view. And whenever, after that, they might sort of moderate a bit. But like what we said, I think probably more than a third will still be part of the base.
Okay. And things like generic Proventil would help the US revenue and margin environment, because I think it did contribute a bit in the second quarter.
Yeah, it's a niche launch. It's a niche launch, and our market share within the Proventil franchise and within the overall albuterol franchise is growing up significantly. So in the latest weekly results that we saw, our albuterol is almost 12% of the overall albuterol. And that is quite meaningful in few months of launch. And we do hope that we are able to continue on this growth trajectory.
Just a quick word again, your gross margins may have declined a bit, but your EBITDA margins have moved up. Maybe Proventil had something to do with it as well, but would you be able to talk about a combination of factors which have led to this? And are these structural in nature? Because there are a couple of notes which say that this first half performance that you've done almost makes it believe that this the tailwinds plus measures that you would have taken make your current cost structure and margin structure and profile a lot more sustainable than maybe some of the others. Would you comment a bit on that?
Yeah, so I'll take both your questions. So I think gross margin has gone down, which is an impact of the mix actually. So if I take all our lines of businesses excluding COVID, the gross margin has actually gone up in most of the businesses. And COVID medicines, by virtue of the alliances and partnerships, come with lower gross margin. However, their EBITDA is actually in line with company, or at times higher than the company actually. So I think the right measure to compare is at an EBITDA level, and that's where you are seeing an expansion, both because of the good margin profile, operating leverage that we get when the revenue scale is strong, and our work done on the costs. So that's how I would put it, and I do hope that going forward, margin improvement trajectory continues there as well. Coming back to the costs, some part of the cost will come back. For example, between Q1 and Q2, there was an enhanced level of activity in the market and at our manufacturing plants, and that has reflected in the increase in other expenses. We have also given increments with effect from July, so I think our manpower cost has gone up compared to Q1 in Q2. So I think to some extent, activity-led costs will come in the system. So that's fine, I think, because that increase in cost will be corresponding well with the revenue increase, and we are fine. So in these times, I think there are certain good costs and bad costs. So I think good cost as a CFO, one needs to fund and one needs to support, and that we are conscious. So I think you will see, for example, to some extent, R&D coming back. Because a couple of respiratory trials, when they trigger, R&D has to go up, and which is fine actually. We have to fund it. So that will go up. Marketing and field activities, which is linked to higher connect with doctors, with channel partners, that will also come back. However, we are conscious of the fact that this has given us an opportunity to make our engine more efficient. And we are taking it pretty seriously. There is a campaign, there is a specific reimagination project going on in the company. And I'm working closely along with our leadership team on that. And we do hope that we'll be able to retain to a great extent the cost efficiency that we have shown in first half.
Okay. Yeah, I was going to ask you about the R&D spends, but you already said that they'll come back to normal. There's no point, I think, in asking about the Goa plant because you've submitted the response, your work, and probably awaiting the response from the FDA. Anyway, just one quick thing. I mean, any timelines that one can expect for these responses to come in, Kedar, very quickly from the US FDA?
Yeah, see, it's in, so some of these things are exactly not in our hands. What is best is, I think we do keep giving frequent updates. We do keep giving responses to their queries, and we do keep partnering with them on that. So that's what is in our hand.
Okay.
And I think it's our responsibility to implement the corrective and preventive action plans and give them feedback. So as long as we do that, I'm hopeful that the agency will do what is required. Thank you.
Last question, Kedar. After such a quarter and such half, is there some estimate or some idea about the kind of earnings growth? I'm not asking for an exact guidance. I wouldn't do that, but just a ballpark assessment or qualitative comment on how earnings could shape up second half.
See, what I think we are targeting is in each of the market, we should exceed and we should outperform that particular market growth. So that's on revenue. So wherever we are operating, I think the target is clearly to outperform the market significantly. And from a margin standpoint, be it at a gross margin level or at EBITDA level, I think cost engine should work with the same level of efficiency. And as I said, I think some costs will come back in the system, but those will get funded by the revenue growth and the gross margin expansion. So that's how we are looking at it. And the idea is to sort of be in the range where industry is today on both these parameters, and if possible exceed it. So I know I have not exactly answered your question, but that's what I can say at this point of time.
I completely agree. But good show, Kedar, Upadhye. Congratulations on that. And from all of us to all of you at CIPLA, a happy Diwali and a prosperous New Year.
Thank you. Thank you. And same to you as well. Thank you. Very happy.